target percentages when you are looking at what you want to put into each specific asset class. And what this helps with is diversification. I know you've heard you never want to put all your eggs in one basket. It's very true. You also don't want to be overexposed into one particular asset class. That's why it's important to spread your money around into a lot of different sectors. What's going on, YouTube? Thank you for tuning into another episode. If you could please smash that like button, subscribe to this channel, and also share this video after you get done watching it. That'd be greatly appreciated. And also make sure to hit the notification bell so you can be notified every time I drop a new insightful video. So within this content, what I want to talk about is portfolio construction. This is so important when it comes to developing an investment portfolio. You have to understand how to construct a portfolio. And all it really is you're simply allocating percentages with the assets that you decide to put into your portfolio. Now, before I get started, I do want to say my disclaimer. Please do your own research. I am not a financial advisor. Please consult with an advisor or a brokerage firm when making an informed financial decision. You must understand your risk tolerance, your time horizon, and be comfortable with making a specific investment decision. Now, when it comes to constructing an investment portfolio, you have 4 steps. In step 1, you want to select which assets will be represented in your portfolio. So anything from stocks, bonds, art, real estate, commodities. These are the asset classes that you would have represented within your portfolio. Once you have that, you want to take a look at your time horizon. That's going to really determine the amount of risk that you're willing to take. So for someone that has a longer time horizon, of course, they're going to be invested more in stocks in comparison to bonds. And then for someone that has a shorter time horizon, they may be invested in more bonds than stocks. However, based on the current market conditions with inflation being at 6%, investing in bonds makes an investor liable for interest rate risk. And that's simply when the value of the bond decreases because of high inflation, which we have now currently in our economy. With high inflation, that's going to cause the Federal Reserve to have to increase interest rates, and therefore, in result, the bond value is going to go down, and you're essentially going to be paying back more to the government when you have a bond in comparison to what they actually are going to pay you when you get to the end of maturity when a bond matures. Now, stocks, they also have risk as well. They definitely can be a volatile asset, but it's proven to grow over time when we do have high inflationary periods, which can build and maintain your purchasing power over time. Crypto is even more volatile, but assets like Bitcoin, they're a great store of value when you hold them over long periods of time, and it's more of a hedge against our current financial monetary system. So that's why I'm someone that's a big proponent of cryptocurrency, especially Bitcoin, because you're really hedging yourself against all of the quantitative easing that we see from just money being printed at ease with the government, with the Federal Reserve, and just how the value of the dollar is manipulated in so many different forms. You want to make sure that you have an asset class that's decentralized, that doesn't that isn't predicted based off of the decisions that are made with our Congress and everyone, and different people in Washington. So you definitely are doing yourself a benefit when you're getting exposure into Bitcoin and much of these other crypto assets. Now, commodities like gold and silver, they're more of like insurance for your portfolio. You don't need more than 10%. I've said it before on this channel before. And actually, if you haven't watched, I did a video, I want to say it's one of my beginning videos with this YouTube channel. It was episode 11. I talked about the 4 strategies of diversification. So definitely check that video out. And also episode 56, I've talked about why investing in precious metals and how to look at that industry as well. Now, if you are investing in paper commodities, which are simply if you're investing in, a stock that specializes with gold or silver, the miner of the precious metal could be a risk because if something happens with the location of that particular precious metal being produced, you have to think about the miners, and location is very important, and it's a risk that you have to evaluate when you're looking at wanting to invest in companies that are in the stock market that specialize with commodities. And then also the lack of liquidity of actually finding gold in the ground. If there's any periods where there's a drought, you have to think about that the liquidity. You want to make sure that you are investing in miners that are going to have proven reserves of the gold that they're finding within the ground. Another risk is newer technologies like Bitcoin. I just mentioned it. A lot of people look at Bitcoin as digital gold, and it's also looked at as a better store of value. A lot of people are looking more towards Bitcoin in comparison to gold because they can get a higher return, and it's actually increasing their purchasing power. Whereas with gold, the price tends to not fluctuate as much. It's going to be stable. And it does have periods where it increases a little bit over time. But a lot of people, just prefer Bitcoin instead because it's an asset that is going to grow a lot more better, over time. Now, in step two, what you want to do is determine what your target percentage is going to be for each asset class. So, for an example, an investor would invest 85% into stocks. Let's say they do 10% into cryptocurrency, and then the remaining 5% they'll put into commodities. This is how you can figure out your target percentages when you are looking at what you want to put into each specific asset class. And what this helps with is diversification. I know you've heard you never want to put all your eggs in one basket. It's very true. You also don't want to be overexposed into one particular asset class. That's why it's important to spread your money around into a lot of different sectors. Your target percentages will also depend on your time horizon, along with your investment objective and the amount of risk that you're willing to take. For myself personally, I follow a 75-15-10 rule. So I put 75% into stocks, 15% into crypto, and 10% into 10% into commodities, specifically with silver. Step three, you want to decide the maximum and the minimum percentages for each asset class that allows you to take advantage of market opportunities. So, for example, let's say for crypto, your target may be 15%, but you can also put a maximum of 25% and a minimum of 10%. All of the maximum and minimums is saying is you have a maximum of a ceiling price that you don't want to overexpose yourself into one particular asset class. And then with the minimums, look at that as your floor price. So that's the way I look at it. I never want to be overexposed. So I keep these ranges to kind of keep me balanced, but also to take advantage of opportunities that I'm seeing amongst different industries. And it allows you to shift your portfolio emphasis due to market conditions. So for me personally, I'm wanting to actually put more money into the crypto space right now because of the growth that I'm seeing with NFTs, which is non-fungible tokens, with the metaverse, how there's a lot of development with these online virtual worlds. When you think about Decentraland, Sandbox, a lot of these great innovative technologies, and even with DeFi, decentralized finance, and just people wanting more freedom and control with their wealth. That's why I'm very intrigued with the cryptocurrency space. And I just see the industry outpacing the stock market over time, but I think that both are needed in a portfolio. I'm never going to throw all of my eggs into one particular sector, but what I will do is I'll shift my portfolio emphasis and maybe reduce my equity, my stock exposure down to 70%. And then that 15% that I'm putting into crypto, I'll increase it to 20 just to take advantage of opportunities that I'm seeing within the different sectors. Now, the final step is the actual selection of the securities purchased in each asset class. So with the 75% that I allocate for stocks, I look for opportunities for companies in the technology industry, communication services, consumer discretionary, and then also I like looking at ETFs that specialize in a specific sector. That definitely gives you good exposure. It's also important to have that international exposure as well. So I love funds that give you access to the emerging markets, where you can get some access to companies outside of the U.S. because I think that the U.S. is a great place for a lot of growing companies that we have seen and that we do business with on a day-to-day basis. But you can't forget about companies like Alibaba. I think that that's a great Chinese company. So I just look at getting exposure in other places outside of the U.S. And you also can also look at large cap index funds. And when you think about large cap, all is that is really saying is the size of the company. So large cap stocks would be like your Apple, your Amazon, your Google, Berkshire Hathaway. Those are going to be some of the companies that you'll see with large cap stocks. Now, with the 15% that I allocate for crypto, I think that Bitcoin and Ethereum will continue to grow and show its dominance within the market, but there are other opportunities as well. I definitely like Cardano, Chainlink, and Cardano specifically is designed to be a scalable platform for running smart contracts, which will help with the development of decentralized finance apps. Chainlink, it also has a focus on decentralized finance, and it helps with smart contracts with accessing external market prices. And Chainlink is actually one of the first companies that allow smart contracts to get access to external market prices. Before them, there really wasn't a decentralized company that was actually doing those types of things. And I'm also paying a lot of attention to the development of the metaverse. I think that this is going to completely transform just the world, with everyone wanting to participate in different online virtual interactions. I mentioned Decentraland, but I think of the metaverse. You look at already some of the things happening with Roblox, which is a software that a lot of kids use to interact and play with friends online and create these different communities. We already know that Facebook recently changed their name to Meta, and they're trying to make some different leaps within the space. And another company that I think you all should check out is Matterport. They're actually a company. They're in the spatial data space where they're digitizing the real world. The ticker symbol is MTTR. And what they do is they design, they build, and they operate online 3D spaces. And it allows investors to engage in a 3D virtual world. So when you think about like what they're doing, they have almost billions of images that they have already captured that they have within their ecosystem. And I really look at this company that can take some leaps within the digital real estate space, where let's say that they have an image of a property that someone wants to go look at or that they're thinking about buying. Instead of having to actually physically go and see that property, they can actually go through this ecosystem, whether it's putting on glasses, and they can actually do a walkthrough and they can see the specifics of this property and this home within the comfort of their own residence, where they don't actually have to go to the property. So they're doing a lot of different things around that. And I just think that it's a great opportunity, and I think you should definitely take a look at that specific company. And this company is a stock company. When you are looking up that ticker symbol. Now for the 10%, I allocate that for silver. I physically have it, and I focus on the Canadian Maple Leafs silver coins. That's what I have personally. And when investing in precious metals, I look at brand recognition, the purity, the quality of the coin, and then of course you want to understand the costs and the premiums associated with the precious metal that you have interest in. So that pretty much wraps it up for this video. I thank you all for supporting this channel. Please smash that like button, subscribe to the YouTube channel, leave a comment, and actually leave a comment and telling me what your current portfolio construction is and what you tend to focus on. And I would love to know what my viewers are actually investing in. And don't forget to hit that notification bell so you can be notified every time I drop a video. And thank you for tuning into another episode, and take care.